I'm Tommy Humphreys for Kitco in Cambridge House at the California Resource Investment Conference. I'm joined by Grant Williams, Portfolio Manager and Strategy Advisor at Vulpes Investment Management in Singapore, also the author of a great newsletter called Things That Make You Go, Hmmm. Now, Grant, precious metals and politics, tell me, who's the worst offender? What's going on in your mind right now? What's making you go, today?
Well, that's some kind of beauty parade, Tommy. I mean, obviously all the headlines are about Europe at the moment. Everybody's fascinated with the European situation, and it's really coming to a head pretty fast now. And I think it's pretty set in stone now that Greece is going to have to default. They're just not going to get this deal done. They need 145 billion euros now. It was 130 billion a few months ago. That's just money that Europe cannot afford to give them to throw away. But if you talk about who's the worst offender, as bad as Europe is, the US has similar problems. The only advantage they have currently is that they have one central bank that looks after a group of United States. That they don't have these different cultural differences that they have in Europe and the history between them. So they're all the worst offenders. There are no good central banks, no good governments at the moment. They're all making the same mistake.
So you think the bullish case for precious metals is as strong as it was 10 years ago today?
Absolutely. I think the people who were into the market early in precious metals saw a set of fundamental reasons for buying precious metals. Debts, inflation, politics and policy, and each one of those reasons has actually got more severe. There's an awful lot more debt. There are an awful lot more unfunded liabilities, and back in 2000, when this bull market really got started, you had central banks who were selling gold consistently. The Washington Agreement was signed in 1999, which gave central banks 400 tons a year to sell. They renewed that in 2004. They renewed it again in 2009, although the IMF didn't sign up to that one. So you had this overhang of precious metals being sold by central banks. Now, not only have they stopped selling those precious metals, they've actually turned buyer. So they're captive buyers, they need to buy gold, and they're pretty price insensitive. They're not going to quibble over $100 an ounce. They need to get reserves up, and they need to get gold reserves up, and that's going to provide a really good tailwind for the gold price.
Absolutely. So obviously there are some people in the precious metals community that are, they're so strong in their convictions that they're, seen as a little bit out there, and it probably hurts the credibility of the precious metals argument. I'm wondering, are you someone that saw gold coins as a child and said, this is the space for me, or is this just an irrational investment decision for you?
Absolutely the latter. I didn't see a gold coin when I was a kid, but as an investor and as someone that's been in finance for a long, long time, I always try to look at the fundamentals, and the fundamental case around owning gold is an incredibly strong one. As I say, it's just getting stronger. So I think if you did grow up around gold, and I live in Asia, and people in Asia tend to have a much better understanding of the rationale behind owning precious metals. If you grew up in that situation, you understand it. If you sit back and take a cold, hard look at the world, the policies, and where the direction things are going in, it's hard not to make a case for owning precious metals.
So what about somebody like Buffett or any of the big institutions in the States who say, this gold doesn't pay a dividend, I'm not interested? When are they going to come along at some point? What do you think about the financial establishment not paying attention yet?
Well, look, sooner or later this thing is going to smack people around the head, because ultimately we are going to end up, I think, in inflation. There's a big inflation-deflation debate, and it rages all the time, and I have that argument with a lot of people regularly. But my answer to them is, look, you may be right, there may be a deflationary period, but central banks have made it very, very clear that they fundamentally believe that deflation can be beaten with inflation. So they've already told us that the remedy they're going to try and provide is to inflate, and they will keep inflating because they believe that ultimately it will work. So if the deflationists are right, it's going to be a moment in time. It will end in inflation one way or the other, and obviously that's going to be incredibly bullish for precious metals.
So how does the precious metals bull run end?
So in my mind, the precious metal bull run ends when central bank policy changes, and when the printing press is taken away from central banks, because people are just not willing to accept interest rates of a few basis points anymore for their money. And look, that day is rapidly approaching. Whether it happens this year or next year is really kind of a moot point. It's going to happen one way or the other. They can't manage this amount of debt without either defaulting or inflating it away. That's the only two options they really have.
If that happens, do you see gold then leveling out or crashing spectacularly like it did in the early 80s?
Well, look, it's hard to say. Look, going back to the 1980s, or the 70s through to 1980, one thing that people tend to forget is that back then there were no Asian buyers of gold. That entire bull market was basically a Western phenomenon. The Asian markets didn't have the money back then to be buying gold. They were at the margin, but there wasn't concerted buying of gold in Asia like there is today. And also during that period, central banks were selling consistently through that bull market. Without the central bank selling, who knows where gold price would have been. Now, if you look at the peak in 1980 and you look at the spectacular collapse, as you call it, things fundamentally changed. Volcker came in and put interest rates up in the teens, and that's what popped that bubble. So I think if you're looking to see a correction in gold or a collapse in gold, then you really need to see some serious changes in the policies that these central banks are pursuing around the world. So I don't think it's going to be a shock overnight. There's going to be talk, they're going to start raising rates, and when you see rates start to rise, whether they're intentionally through the Federal Reserve, which I don't think they're going to be able to do ever, right? They're going to have to keep rates low forever, or more painfully for them, if the market starts setting interest rates higher, then you're going to know that's going to be a flashing warning sign that maybe the bull market is starting to come to a close. But the Nasdaq went up 50% in the last 9 months of the bull market. So, that was when people were jumping in and the smart money was selling. So.
Can you tell me what's the asset allocation of your fund like right now?
Well, we have an allocation to precious metals. It's a decent allocation to precious metals. We have several funds, and what we look to do is we try and provide a good return. We don't look to raise assets. We're not looking to just raise as much money as we can to invest. We're looking to make a solid return on our investments. And right now, precious metals are a particularly good way to not only protect your money, but also grow them because the price is going up. We have some equities, we have some debt. We try and have a pretty balanced portfolio, but right now we have a decent weighting in precious metals.
What would be the weighting in precious metals?
I don't really want to talk about specific weightings, but it's a significant weighting.
I appreciate that. Okay, so tell us a little bit how we can stay up to date with you. And
I publish a weekly newsletter called Things That Make You Go Hmmm, as you said, and the best way to get hold of me for that is to send me an email at ttmygh@me.com. My work gets put up on Zero Hedge and various other places, and each time it is on the PDF file that gets posted, there's a link you can click on to sign up, and it's a pretty easy process. It's free, and feel free to sign up.
You're happy to have everyone share it?
Absolutely,
We'll make sure to put it up on the Cambridge House blog. Feel free. Anyways, Grant, thanks very much for being here. For Kitco and Cambridge House, I'm Tommy Humphreys. More interviews coming. Thanks for watching.